We're live. We're live on the 23rd of March. Vielle, CPD Accredited, Google Hangout. Okay, so hopefully people have been watching a few of these by now. And let's first of all remind you to subscribe to our YouTube channel. That way you'll receive notifications of everything we're selling, so please do that. And remember, we're CPD accredited, so if you want to receive a CPD certificate after this hangout, then please send an email to any one of us at Vielle, or you can send it to invest@vielle.co.uk. We'll pick it up and we will send you a CPD certificate. Okay, so let's change the format slightly this week. What we're going to do is I'm going to encourage you to please send messages in. If you go on to your YouTube channel, you can see on the right hand side there's a live chat. If you send messages, we will be able to see them, and we will be able to respond hopefully to any messages, and we'll actually ask our special guest. So you can fire any questions at me or Richard or Dale or our special guest, who I'm going to introduce in a moment. News of the week. The first thing I thought would be interesting would be to refer to a report out from Capital Economics on the UK housing market data response. And this week they said that house price growth in January showed a slight downwards trend. Now, they said the annual house price growth accelerated to touch from 5.7% in December to 6.2% in the latest data, but the December figures was revised down from 7.1%, which was recorded in last month's estimate. So the overall picture of house price growth has actually cooled compared to where it was last month. And the report also says that looking ahead, with house prices very high, buyer demand growth having paused and real incomes getting squeezed, an acceleration in house price growth seems unlikely. So I thought that was quite an interesting piece of news to mention. Now, my personal view, and guys, everyone's welcome to throw it in, is that actually the London residential market is an awful lot weaker than all the reports say, because the reports, funny enough, normally come from the mortgage companies or company estate agents. But anybody living in London knows that the market is pretty weak. But there's one interesting thing that was mentioned to me this week, which hadn't really occurred to me. Stamp duty is now very high. Many properties in London are over 1.5 to 2 million. You've got to pay 10 to 12% on the top rate in SDLT. So therefore, you'd think the market has cooled. So there's less buyers around. However, what was mentioned to me this week, which I thought was very interesting, is quite soon the change to the non-dom rules are going to come in. So if you're non-dom living in the UK, you're going to get taxed on your income elsewhere. So all those wealthy Europeans and from other countries who actually were living in England and not paying tax on earnings abroad, there's no point in them staying here now, because they are going to be paying tax on abroad. So I think that actually is not something which you read about, but that will actually reduce the number of buyers for those houses at the higher end. And in fact, they will be selling their houses at the higher end. And therefore, there will be a further downward pressure. And I think the London market is in for a very rocky time. So that's my take as a non-residential professional on what's happening in the residential market. Now, the second piece of news I wanted to mention was there was a report out this week by Harris Interactive, which said that Zoopla's national spontaneous brand awareness is now at an all-time high, with the gap over Rightmove at its biggest ever level. And consumers were asked which property website they could name unprompted, and Zoopla scored a record 49% compared to 40% for Rightmove and 3% for On the Market, which no one ever hears about anymore. So that's darn good. But I mention that because we're going to bring in our guest in a moment, as opposed to going through all our sales. Let's bring the guest in straight away. First of all, by the way, let's just say hello, everyone who's here. We've got Dale Henry, handsome as ever, Richard Walfrid, and I'm going to share my screen now, because we're now going to bring in Chris McAlpine. Now, Chris McAlpine, as you can see, is a retired American professional hockey player who played for the New Jersey Devils, the St. Louis Blues, the Tampa Bay Lightning, the Chicago Blackhawks, and the Los Angeles Kings. And there he is, Chris McAlpine. Unfortunately, that Chris McAlpine isn't available today. And if you go down here, we have this Chris McAlpine, who actually from Zoopla, who is, Chris, where are you? There you are. Are you there? There you are.
I'm here.
Chris McAlpine, who is the head of commercial property at Zoopla. So welcome, Chris.
Hi there.
So remember, anybody who's watching, if you would like to throw a question at Chris, I think it's very interesting, and thank you very much for joining us today, Chris. I think we're very interested. You can ask Chris, head of commercial property at Zoopla, anything you like, and we will throw that question at him. So Chris, tell us about Zoopla.
Yeah, sure. Well, I head up the commercial property side, which is a small but perfectly formed division within Zoopla. I was brought in just over 3 years ago to set up the channel because there was a realization that it was a very different proposition to what we've been doing very successfully in residential. And in the 2.5 years that we've been live, we've now grown to about 450 commercial agents who list with us. We've got about 47,000 listings. Given that there's some joint agency on there, I would say that we've got about 1/3 of the market so far, and we are, number 2 in a rapidly consolidating market. It's great news that brand awareness, we are number 1, yes. But I have to be honest, we've still got a little bit to go in terms of audience, but we are closing that gap fast.
Yeah, but I think that part of that actually relates to the commercial market and how agents actually operate. But we'll come back to that in a moment, if I may. So tell me, what are you offering your audience?
Well, in terms of our subscribers, our agent subscribers, it is pure lead generation. That's what we're about at the moment. We are giving them ability to connect with the unrepresented tenant market, and anybody who operates in that space knows that they tend to be the sort of high number of deals, but the lower value deals. Obviously, the bigger the transaction, the more likely the tenant is to actually seek professional representation. So what we do is connect the agent to that unrepresented tenant market.
Yeah, actually, it's interesting you say that, because we can, as an agency, as an investment agency, we know all about online and how to find the relatively unrepresented buyers, and what you're doing online is finding the unrepresented tenants, it sounds like. But I imagine you're looking to move towards the commercial investment sector as well.
Yeah, I mean, there is lots to do in that sector. I mean, it is a sort of sub-market, but now that the occupational side of our business is sort of getting close to maturity, there are lots of other sort of specialist areas that we want to focus on. And we've been doing some interesting pioneering work with you, and there's lots more that we can do in that field.
Yeah, I mean, we as you know, we're big fans of online. We embrace the portals, and we can perhaps talk about that in a moment, actually. So now we want to help you, of course. What are you offering? Sorry, can you explain the commercial offering, the commercial offering to the market?
Yeah, sure. So it's a very straightforward subscription-based service. The rate that we charge depends on the average number of listings that an agent has. We've structured it to encourage people to put their entire list of current instructions on there. They can either load them manually, or we can take a feed if they use a sort of content management system. And we keep it very, very simple. It's a monthly rate. There are no hidden fees. After an initial 6-month contract, it's monthly rolling. We don't go in for any of that sort of annual self-renewing contract that certain other people in the business seem to favor. And we've had a very low churn rate of agents, which I think shows that we're providing a very cost-effective route for people to actually reach the unrepresented tenant market.
Okay, let me ask you, because I'd like to talk about the investment market in a moment, which is what we're very active in, as you know. But if I can open up a little bit more widely, what do you think of the role of the portals in the commercial market and perhaps also in the commercial investment market?
It is really just, giving you a digital platform. I mean, what I sort of knew was going to happen was that we would do very well in the space because of our brand recognition. If I could have done this as a standalone startup, I would have done, but all I'd have done would be to lose an enormous amount of money, because in this space you have to spend tens of millions of pounds actually building a brand online. And when you look at the agency market, at the unrepresented end, you're talking about millions of pounds worth of revenue. So it doesn't really stack up unless you actually are able to leverage on that brand. Sadly, we don't have the market clear to ourselves. There is another well-known portal called Rightmove, and we're battling it out with them for the #1 slot. But between the two of us, we really have begun to, come to dominate commercial property search.
But you're talking about occupier search.
Yeah, for occupier search, but it's the same for investment search. Now, your professional investor will have their network, which they will use, but increasingly when you're looking at the smaller level, people are going to the internet to try and find opportunities, and we can perform for people. And whilst we haven't optimized our channel yet for the investment market, we are getting a lot of inquiries, people who are interested in buying, investment properties because of the yield and the difficulties that the buy-to-let market on the residential side seems to be suffering.
Yeah, I mean, what I would say in terms of seeing Vielle, and the guys, I'm sure if they want to come in, you're welcome to, Dale, Richard, is we actually have put our properties up on Zoopla, even though we've got a very high Google ranking ourselves as an agency, which I can show you in a moment if people would like to see. But we still use Zoopla because we are all about understanding the need to go as far as you possibly can with marketing property. And we have definitely seen inquiries through Zoopla of investors which we weren't aware of before, even though we are very highly recognized on the Google rankings. You still have to embrace all the portals. I actually think that the investment agency community, for whatever reason, are very old-fashioned and they don't like using the portals. They think that using a Zoopla or a Rightmove is for some reason undermining what they're doing. I don't agree at all. And they still use some emailing systems, which you and I are aware of, Chris, which I think have had their day. So I actually think that Zoopla is all agents actually should use the portals. I've got if I can throw another question at you though, Chris. You see, I have a view that there are too many agents around, and I also have a view that the technology is changing the way both estate agency and investment agency is working. So my question for you, and probably relating to the commercial market, is if there are going to be less investment agents around, your audience is going to shrink, isn't it? So how are you going to, what do you do to counter that? Or maybe you don't agree there will be less agents around.
I don't think there will. I mean, you will always need intermediaries, if we want to call them that, who can package things and advise how you're going to get the best price. So I think it's an evolution. I mean, we've seen on the residential side what the likes of Purple Bricks, have done to the residential market. And that's really just sort of embracing everything the internet has to offer, driving down transaction costs. And I think agents just will have to get a little bit smarter about embracing the technology, using it well, and shortening the time to sale or the time to let, and reducing their overall marketing costs. And say they're old-fashioned, I think part of the reason is portals that have been in this space before, because of the, as I suggested, you need tens of millions to actually build a brand. They haven't delivered. So there's been a bit of sort of skepticism, and people come along saying they're the next best thing since the invention of sliced bread. Created a little bit of sort of fatigue. And when it comes to ourselves and that other well-known household name, the initial thought was,
Vielle,
these are residential.
Vielle you're talking about.
These are residential sites. They don't understand commercial property. That has changed very fast. I mean, in the 2.5 years that I've been actually running the channel, it is amazing how many people who to me 2.5 years ago are now actually ringing up saying, how do we sign up? So it is changing. There's a long way to go. I think when it comes to customer management, lead management, telephone call management, there's still a fair way to go. And dare I say it, residential estate agents are ahead of the curve compared to commercial agents.
Yeah, I think that residential agents were marketing properties in a more superior way than the commercial agents for some years. You could just have to look at their offerings, and commercial agents have continued to operate on the basis that they think that they know one or two people and they can put deals together. And of course that does happen. But the nature of the game has changed, and the nature of mass marketing and embracing people from all corners is the way the world's going. And it's impossible to do that as an investment agent just by phoning 3 of your friends, which is how the market has been operating. Which sort of leads me on to tech. I'm going to come back about the commercial offering in a moment, but there's something I actually want to show you guys and everyone watching, which I actually haven't mentioned. I want to show something which I think is quite interesting, because this leads on. Can you see that? So, that's eMove. Right, look at this. Okay. This is Google ranking for eMove. And if you type in eMove, or if you type in how simple, and you go 3 paid click adverts down, this is on a how simple search. It says, using a virtual estate agent, you get virtually no service. www.foxtons.co.uk. It says, Foxtons, simply the best estate agent for your house. Get a free valuation today. So they've got an advert that they've paid for on the How Simple lookup. And in fact, they've also done it on eMove. Look, same thing. Don't cut corners with an online estate agent. Use Foxtons instead. Demand more. I mean, quite interesting, quite aggressive marketing. I'm not sure if they are... if they're actually going to be breaching any rules in terms of defamation, but it does show how the world's changing. I mean, and I'm just interested in what you think of the sort of the rise of the purple bricks and the eMoves, and how it might be affecting the existing estate agents.
Yeah, I mean, they've made quite a splash, and for those that are publicly quoted, the market seems to be well and truly behind them. My personal view, and this is definitely not my employer's view, but my personal view is that this is just the first stage in an evolution. I'm quite sure that the agency sector, whether it's commercial, residential, is going to be very different in a few years' time as technology really does get adopted widely. I mean, that's a canny marketing move by Foxtons, but I bet you there's a lot of people.
I think they're going to get in trouble.
I don't know, but I mean, that there's going to be people in Foxtons who've got a game plan to embrace, the virtual agency sector, in the same way that, a number of leading sort of old school agents have been taking strategic investments in competitors to Purple Bricks.
Yeah, I don't actually, you're talking about Savills, aren't you? I don't really understand why they did that, actually. I don't know why they just didn't set up their own online agency, but they invested in Yopa, which I think will be a very powerful business, because, as you said earlier, you need money for marketing, and they've got lots of money for marketing. So I think Yopa will actually do very well. Prop tech. prop tech buzzword at the moment, isn't it?
It's certainly.
What do you? I mean, I don't know. I've been to a few of these prop tech shows, and they're full of guys with beards telling everyone how fantastic they are because they've just raised 150 grand off some angel investor, and there's sort of an outer circle of older guys who've been in the game a long time and think it's a great idea, but really people in property aren't going to use it. And I take it's very interesting prop tech. I'm hooked into it, as you know, but I am slightly cynical of a lot of the ideas being thrown around, and I think there's almost a little bit of a bubble being created. And if you look at some of the early valuations of some of the online agencies, they were extraordinary. So what's your view on this prop tech bubble?
Well, I wouldn't like to call it a bubble, but I do hear the word prop tech far too often at the moment. And I mean, all I would say is, you know, there are going to be some surprises and some disappointments along the line. A lot of money is being raised. It often does surprise me that, you know, we know what size the market is. We know how many commercial properties there are out there. We know how many are on the market, what the average fee size is. And so some of the revenue projections are slightly laughable in certain instances, but you know, there's definitely changes in the air. On one of your previous webinars, it was talking about 50% of agents who use Excel as their database, and I would validate that. Certainly from what we see, there's an awful lot of agents who are not using a CRM or a CMS, and that definitely has got to change. And you know, there are some interesting opportunities. You know, there'll be some winners and there'll be some losers. So okay. I think it's, you know, it's difficult to call.
Yeah, let's see. Well, I've heard there's no particular technology that you've heard about in property which is actually revolutionising the way people transact online. Have you heard any rumours?
Oh well, there's something called click to purchase. I have heard of that one.
Good. I'm pleased to hear a bit. Right, guys, Dale, Richard, anything you want to throw at Chris?
No, I very much agree that I think the portals are helping to create what is a changing agency market into sellers and advisors, and I think that the freedom of information means that agents looking to earn a fee for simply making a phone call or an email is changing far quicker than anybody realizes. And I think the portals, as well as the clever fleet of foot agencies, are actually collaborating whilst perhaps not realizing it.
I'll just say from an agent's perspective, just going back to what Chris was saying, it's been very interesting since we've been sort of working with Zoopla and listing our investments on Zoopla, just as we were saying earlier, just how many inquiries we're getting from investors who clearly don't know sort of how to access the market, and online is the obvious answer. So I think all agents should be using you know, the Zoopla's facilities, because we've clearly seen the benefit, and as I said, we're getting inquiries and interest all the time on our sales that are listed on there. So yeah.
However, if I may just share my screen with people watching, I want to show you something else, if I may. Zoopla is very good. Commercial investment property for sale UK. This is, as you can see, I put it into a search term as a typical example of what an investor would look, and look who is number one behind the paid adverts, Vielle. And I'm afraid to say Zoopla aren't there. So Vielle has a role to play. Sorry about that, Chris. But I have
no, that's all right. As I said, you know, we at the moment, you know, our focus is the occupational market. You know.
Oh, good. So we've got another year or so before we go bust. All right. Well, that's good. That's good. Okay. So, Chris, thank you very much. You've been great, actually.
Thank you.
That's what we're going to do now. Is the guys normally do a quick roundup of what we're selling, And if anybody wants to ask you a question, just again, if you fire a question up, I'll see it on screen and we can come back to you. So let's see, who wants to go first? Should we start off with current sales? Richard or Darryl, do you want to bounce between them, or what do you want to do?
Yeah, I'm happy to kick off. I'll be brief because they're all listed. If you go onto our website, singviellesales.com, you'll see them all listed, and you can go through sort of in more detail at your leisure. But the first one to mention, which is actually one which we're just literally launching now, is a very interesting retail investment we've got for sale in Ilford. Yeah. So this is 100% prime retail investment on the high road. You'll see that it's sandwiched in between Primark and M&S. Ground floor and basement let to Pavers, the shoe shop, who are a very strong covenant. They've shown pre-tax profits about £11 million, about £40 million net assets. Their lease expires in 2019, but they've just removed their November 2017 break. And you've got the first and second floors let to Primark with 48 years unexpired. So very, very, very unusual, and obviously highly secure, long-dated income on those as well. Just moving on, we've got a Ask Italian restaurant investment in Swansea city centre, which has got about 7 years unexpired on the lease. Overriding lease to Ask on the whole building, but they're not in occupation of the upper part, so there's potential to enhance value by getting back the upper parts. That's just over £1 million, 6%. We have just launched an Iceland store in Saltcoats in Scotland, which is 13 years unexpired with guaranteed rental increases. That's about £1.25 million, 6.25%, going to over 7% in 2020 and over, and about 8% in 2025. We have got a Bank of Scotland investment in Falkirk, which is showing a very high yield of 8% with just under 10 years unexpired. Again, prime pitch on the high street. That is just 1.15 million, which is 8%, as I said. We've got a health and fitness club in Cwmbran in South Wales, which provides just under 20 years of undoubted income, being let to Nuffield Health, guaranteed by Virgin Active. And we have a high yielding high street retail investment in Doncaster town centre, again right in the heart on Baxter Gate, which is 7.75 years unexpired to Anne Summers. Yeah.
Sorry, you stopped.
Huh? You go.
Did you measure this one up?
Did I measure what? 860,000, 8%.
Hi everyone. We are working on a load of new sales to bring to the market over the next couple of weeks. I've got leisure investments in London, in the northwest, on the south coast. We've got high street retail in London and elsewhere in the UK. We have got retail warehousing in England and Scotland we're working on. So income predominantly, all quite interesting, all ranging in terms of lease profile, covenants all very good, rents all in line with market levels, and reversionary as well. So please get in touch or keep in touch over the next week or two, because we'll be drip feeding these out to the market quite soon.
All right. Anyone needs to add anything? Oh, there's one thing I would say, actually. There's one last thing I would like to mention. We have talked about the online auctions that we are running at Vielle, and we've used the click-to-purchase platform to do online auctions in the past. Version 2 got launched a few weeks ago, and we will be running online auctions as an option to what we do using the click to purchase platform. Just remember that the online auctions that we run are real time with a live auctioneer interacting with bidders in exactly the same way as if you were standing in an auction room. The bidder can send a question to the auctioneer. We can send questions to directly to potential bidders, discreetly, and it operates online. It's just instead of standing in a ballroom auction, as opposed to the eBay style auctions, which I know various people have been trying to promote, which as yet haven't worked. And in fact, Chris, I don't know if you remember that once upon a time, Zoopla were trying to do eBay style auctions. So anyway, I think that's
before my time.
Before your time. Well, why's my mouse stopped working? Oh, my mouse stopped working. Anyway, so that's what we're up to. Guys, thank you very much. Chris, you're a star. You may not be a hockey player, but you're a lot more useful to us.
Good, thank you.
Dale, Richard, me, thank you very much. If you want to sell a property, you know where to come. Thank you.